Hello everyone, welcome to another session on dollar INR. It is at a very interesting level, so I wanted to come and share my thoughts. Okay, so this is the dollar INR daily chart, the onshore prices. Okay, the prices from 9 a.m. to 3:30 p.m. onshore prices. We are all very well aware of what happened 2 days back. There was a big gap down here. Okay, from 91.50 levels to 90.44, almost 1 rupee lower, a big gap down. But what is interesting is I wanted to show you the last 3 days what has happened. First day, obviously from Monday to Tuesday, there was a gap down. But what was interesting is that prices on that day came to as low as 90.04 but closed at 90.26. Okay, so 22 paisa higher on one day. Okay, and what happened today? Today also the prices went to as low as 90.07 but then closed at 90.35. Okay, again a big lower shadow. Okay, so whenever prices are going towards 90, 90, 10, there is a decent amount of buying interest and the prices are coming higher. Okay, so buying interest means the dollar importers, the dollar buyers, importers are buying dollars and the prices are going higher. So keep that in mind. That is a very important conclusion that we are trying to draw from the price action of the last 3-4 days. Okay, now I will show you another chart. I will show you the 24-hour offshore chart. Okay, let me get it here. Okay, so this is the chart that we have been following very regularly. Okay, now what I just said is something very clearly shown here. Okay, lot of long lower shadows, but in addition to that, what I want to show also is that look at this trend channel that we are looking at. It is the linear regression channel, upward sloping, for it's like 200 days linear regression channel. So really important for medium term to long term idea formation. Okay, so this channel is upward sloping, blue color line, and if you look at the current prices, it is very close to the linear regression channel, that is this one, the blue one. It is very close to that channel support line, the lower line. Okay, additionally also look at this purple line. Okay, this purple line that is moving, this is a typical normal 50-day moving average. And what we have seen in history is that 50-day moving average is a really good support indicator. We have seen it finding support here, okay, finding support here, somewhere here. Okay, so multiple times in the past, 50-day moving average has been a good indicator of support levels for dollar INR. So what does that lead to as a conclusion? The conclusion is that prices have come down on a big announcement. Okay, obviously when the prices were going higher, there was a lot of pessimism about the tariff that US had imposed on Indian exports, but now the tariff is reduced, heavily reduced. So we saw a 1 rupee reaction. But 3 days into that big event, the prices are coming lower, but buying interest is pushing it higher. And couple that with the technical indicators indicating that probably 90.00 to 90.2530 is a good support level. So what does that lead to dollar importers? Dollar importers are recommended to do some degree of dollar hedging. Okay, you need to hedge and mitigate risk on some portion of your exposures. All of us are very well aware how the prices went higher, and it went higher at a maddening pace. Okay, and no one could do anything because it was happening just too quick and too fast. But now it has reacted by almost 1.5 to 2 rupees from the peak, and that is a decent decline in such a market. And then coming at a support level where we are seeing buying interest, and also understanding the fact that these kind of gaps that are formed in dollar INR, we have seen in history that these gaps ultimately get filled up. So all of that pointing towards the fact that the dollar INR prices might go higher in the future. Okay, so you should look at hedging your payables, short-term payables, and how to hedge. You can use simple forwards. There is a 2.5% forward premium, so you can use simple forwards to hedge. But if you are really optimistic that rupee will gain further in the future, so I might not hedge. Don't do that situation, get into a situation where you don't hedge. In that case, if you have that kind of a strong view, hedge with vanilla options. You will have a cost, but then if rupee gains, you will be able to participate in that rupee appreciation phase. And if rupee weakens, you are anyway protected at the strike price. Okay, so you should do some kind of hedging, whether it is using forwards or using vanilla option, depends upon your risk appetite. Okay, so that is it from my side. Have a great evening ahead.